Yes, thank you, Matt. Jedi Options today, we're going to be focusing on order entry. On Monday, Coach Gino, he did a little webinar on orders. There's all sorts of advanced orders you can do, contingencies, first triggers, all bracket orders, and all the rest. He gave that treatment on the stock side. I was jealous, and I'm like, listen, options, let's give them the same love. So we're going to go through some more mechanical, right? Application, practical stuff here. How do you build an order out in different situations? It's not super sexy, but listen, like this is a skill that if you don't have, you can't trade. So it applies to every single person on the planet that wants to place a trade. So to make this interesting, to make it more applicable to what the market's doing right now, I want to build a trade. And Matt and I talked about this pre-show. It's like, all right, do I want to build a bull trade? Do I want to build a bear trade? From looking at the S&P, this is the North Star. This kind of guides my short-term bias. As we've said, I love holding the 9. Okay, I think that bulls have declared or achieved a decisive victory today. There's 3 hours for them to screw this up. I'm assuming they're not going to screw it up, but the test and holding of the 9 EMA, I think, was telling. The challenge for me in building a bull trade, as an example today, is that I don't. The setup is not as easy to build trades around. So what we're going to do is we're actually going to build a trade bearish if we break today's low, because I think breaking today's low would be damning. I think that it would signal potentially a retest of the lows. And you've got a lot of downside if we take out today's low when you see the market roll over. So could be an interesting bear idea. So what do you do here? Well, the first thing you got to do, you got your pattern. I just explained it. We're going to assume this is a bear retracement. You pessimist, we're going to break today's low and you want to bet lower. Fine. What do you do? Well, you could buy puts. SPY is pretty expensive at 370. So I would rather do a put spread. Otherwise known as a bear put spread or a bear put vertical spread. Or if you're insane, you can call it a bear put vertical debit spread. It's very redundant, but you're buying a long put, which is also redundant. You're buying a put and you're selling a put against it, lower strike. That's what we're going to do. And I'm going to build the order with a condition to only get in if we break today's low. Which is essentially the 9 EMA. Today's low is $370.95, $370.95. Let's go to the trade tab. And let's take a look here. We're running out of time for October. Gotta start going on November for your trades, I think. November, December. December's an eternity at this point. I'm just going November. Okay, I think 6 weeks is okay. Basic bear put. This is not the focus of the video here, but basic bear put. I'm going to keep this simple. I'm just going to buy the at the money put, the 375, and I'm going to sell the 370. I'm going to give you a cheap trade. Okay, simple $5 wide bear put, paying around $2 right now. Well, that would be if you bought it right now, but I don't want to buy it right now. I want to buy it if we break the 9 EMA, if we break today's low. I want some confirmation that today's bullishness has been rejected. So what do you do? Well, listen, you got to put in some kind of condition. If you want to put this in ahead of time, you got to tell the broker, hey, buy the bear put if and only if S&P breaks today's low, which was 370.95. Well, this little cogwheel on the right-hand side is where you put in all your order conditions, all your order rules. You click on it, you get the box. The first third is just a repeat of the trade. Buy the bear put spread. Okay. The second third is the conditions. What's the conditions? You could submit it at a certain time, or you could submit it based on a price condition. So I'm going to put in under the symbol SPY. The mark price is just the current value. Trigger at or below, and then whatever your trigger price is. For us, it's 370. I'm going to put it 1 penny below the low. You can put it further down, but whatever. Just want it at least 1 penny below the low. 370.94. If the S&P gets below 370.94, then route my order. What's my order? My order is to buy this bear put spread. Well, right now I'm buying it for $1.91. I assure you it's not going to cost $1.91. It's going to be more expensive because the stock price will have gone down. So if you want to, you can make it a market order and you could say, listen, I'm a simple man. I'm not picky. Just get me in. I want to guarantee you buy this sucker. I'll give you a market order. Okay. Do the best you can. Just get me in. Okay. Buy market if we break 370.95. Pro of that order type is you will get in if the stock breaks the trigger. Con, maybe we gap down. And when the market opens, bid-ask spreads are really wide. And you've given the broker carte blanche. You've said, just get me in, man. I don't care. Like, give me the best price, I guess, but whatever. And they may be like, listen, prices suck, but Tyler didn't care. He just wants in. So give him a bad fill. You could get a bad fill on this. Now you say, I don't want a bad fill. Okay. I'm a simple man, but I also don't want a bad fill. Okay, fine. Then you can be more strategic about this. You can say, tell you what, use a limit order and set the price, not at 192. I mean, I don't want to guess where the price is going to be. Just set it at the midpoint. Okay, that's the mark. Try to get the middle of the bid and ask when you're out that order. Okay, so if the bid is $3 and the ask is $3.20, they're going to put in a limit order at 310. Oh, I feel better about that. I'm not going to get a terrible fill. Okay, but I may not get filled. What if they try to get 310 and as soon as the market opens, it plunges and your limit order is left hanging out there, never got filled? You have to decide what's most important when you set up conditions and contingencies. And yes, sometimes you're not going to get filled. Okay. If you're in front of your computer and monitoring it, you could probably make a quick adjustment if you didn't get filled if you wanted to. But that is how you set up a conditional order to buy the put spread with a limit set at the midpoint. Okay. Let's say we're good on that piece. So that's my buy. Now I want to, did I put a time in the past here? Sorry, you don't check that box. You just put in the condition down here. That box is only checked if you're doing a time threshold. That's my entry. Now, maybe I want to put in a stop loss. Maybe I want to put in a target. Matt, by the way, as I'm talking, the S&P is going up. So I think I'm going to make this Jedi Options segment as long as I can. I'm not stopping, guys. Don't you worry. I got your back. I'm going to keep talking because we're driving the S&P higher here.
Which means you got to keep talking until it breaks yesterday's high.
Which is the challenge because I was told like I should try to target 10 minutes here. So see what I can do in the next 3 minutes. I want to put in a stop loss and a target just to illustrate both. So first triggers OCO. Okay, this is otherwise known as a bracket order, where you're putting in both. Really, it's three, right? Entry, and then the bracket is like target and stop. But first triggers OCO allows me to put in a target and a stop. So a couple ways you can build it. I'm just going to right click on the entry and create an opposite order to close my trade. Well, listen, by default, it has the same criteria as the entry because you duplicated it. So you got to fix that. Where do you want to put the stop loss? Listen, if we break today's low and I get in this bear put, when am I wrong? My premise is that we're going to go to the lows. I would be wrong if we broke yesterday's highs, right? Because presumably the stock went below today's low and said, I'm headed for the lows, baby. And then it's like, just kidding. And it goes back and it breaks the pivot high. That'd be bear stop out day is what is the term that we use. Well, why would I want to be in a bear put at that point? I mean, my original thesis is shot, so I'm out of here. Yesterday's high was 378. Okay, so what I'm going to say is if we get above, if the S&P gets at or above 378, I'm out of here. What do you mean you're out of here? Well, what I mean is sell my bear put spread. Now, could you put in a limit and link it to the midpoint? You could. Honestly, I'm not that picky when I'm wrong. Okay, it's more important for me to get out than to get the best price. So I would probably set it as a market order just to get me in. Okay, I kid. I would never set it as a market order. I would be in front of my computer with an alert and I would do this manually. But whatever, this is hypothetical. Okay, if you really just want to get the heck out of Dodge, set it at market. It'll bail. Close the bear put if we break 378. That's the stop loss. What about the target? I'm on the fence on presetting targets, to be honest, because I like to maximize gains. Okay, but I'll just show you how, just in case you're like, listen, I want to take profits if we hit 357. If we go down to the low, I want to just get out. Okay, create another duplicate order on your sell. Now you got a second sell order. This is going to be your target. Again, I'm tying all of these back to the stock price. So I'll click on the cogwheel. If the S&P gets at or below, the low was 357, I think. Pretend like it was. I don't want to go look again. 357, whatever the pivot low was. When we hit that, sell the put spread at market. Now, if you want to be more precise, set a limit order at the midpoint or the mark, and that'll get you out there. Okay. So listen, you can apply the same things you learn with stock trading. Get me in at this price, get me out at this price, get me out at that price, entry, stop, target, all tied to the stock price based off the chart pattern and your chart read. You don't have to reinvent the wheel when you go into the options market. You can use the same techniques, same principles. You just have to know how to build the order out. And today's illustration shows a first triggers OCO, entry, stop, target, and quite honestly, it's automated. Like it's in. The criteria is in. So if you're not going to change your mind and you don't need to make any kind of an adjustment, set it and forget it. See you later. Come back later and you win, lose, or draw. I mean, it's all preset for you. So that's the beauty of using the conditional orders. I've freaking done my job. Okay, done with the 10 minutes. I just talked the market up another 10 bips. Okay, so we're almost back to the green. You're welcome.